Double O.
Hey, champion!
Yes, sir. How you feeling, brother?
Doing great.
Hey, ladies and gentlemen, welcome back to the Stack Crypto channel. It's another beautiful day here. A beautiful Friday, if I do say so myself. The sun is up, no snow on the ground. You know what I'm saying? Hey, that is always a combination for good stuff. Now,
Yes, sir.
Double O, let's
Yes,
jump
sir.
into this here, man, because we're talking about something very interesting today. When you do technical analysis, right?
Yeah.
When you trade,
Yeah.
there is this idea, you know, that I'm sure most traders know it. When in doubt, zoom out,
Yeah.
right?
Yeah.
When
Yeah.
when you're not sure what is gonna happen, you want to zoom out on the chart and see historical data and see what are the
sir.
possibilities.
Yes, sir.
Now,
Best
I would like
practice,
for us
baby.
to, yeah, it's practice, right? I would like for us to zoom out again today, right?
Okay.
However, this time around, we're going to be zooming out on the economy as a whole, right?
Preach.
We're going to be zooming out and we're going to see what is happening all across the board, because one of the things that we've stopped doing recently, it's not that we're never going to do it anymore, but we have slowed down on the stock buying situation, right? And we have decided to zoom out, take a look at the economy as a whole. What is going on? Does it make sense to keep buying, to keep buying these stocks and just buying stocks, which it feels, I'm sure if anyone is getting to the market right now, you must feel like you're buying and the market just keeps dropping after you've bought, right? So we're going to take a look at some critical points, right? So economic factors, which draws a picture for us where we stand and I guess our outlook for the
Yeah.
year ahead of us.
Yeah, we are literally getting rid of all the noise, slowing down on all the speculation. Oh, the market is up today. Oh, the market is down tomorrow. Oh, let me find this nice call option. Nah, I look at the long-term picture, man. I'm tired of throwing money away.
Absolutely. And that's the thing, because one thing that we also have to point out, we see articles every day, right? The market is up, the market is down. Bitcoin moves 5% and everyone writes an article about it.
Screaming, yeah.
And if you look at it in the grand scheme of things, it does not matter.
No, it doesn't.
It really doesn't, right? Like, just simply put, it does not matter. Because if you look over a period of time, you will see that if you went with the news, you find yourselves in these pockets where you're selling, or if you're reacting to mainstream media news, you find yourself in these pockets where you're reacting to the news and you're losing, right? Let's say if you're watching someone like Jim Cramer, then things are probably not going well for you. So, some things we're going to be looking at today, right? CPI, right? And
Yeah.
before we even jump into this, what do you think? Should we just define some of these terms that we're going to be talking about? Some of the terms that we're going to bring up in this?
Sure.
Because I think one of the biggest parts is also we want to educate people, right? Just the same way we educated ourselves.
Yeah.
It would seem that part of the reason why things are the way they are is because the general public, most people don't really care to dive
time.
deep into
Yeah.
learning about the intricacies of the economy.
They just
But-
listen to whatever the media tells them. And what we've been
Exactly.
finding out since we've been doing our own research is that some of these outlets literally have
Right.
agendas. They either
They
paid
do.
out by some of the central banks, paid out by these banks, or whatever it is. But the information coming out from these outlets are kind of very questionable. Very
It is questionable. There's a reason why right now there's a lot of people don't trust mainstream media anymore, and a lot of people don't trust the government. That is not something that happened because we said it or because someone else said it. It's because ultimately, to put it less eloquently, people have a bullshit sensor, and they can sense the bullshit, right? And that's just what it is.
Yeah.
So some of the terms we're going to be talking about here today, right?
Yep.
Actually, if we can whip our PowerPoint back to
Yeah.
the
Yeah, right here.
very first screen there,
Yeah.
right? Some of the things we'll be talking about: CPI, PPI, 10-year Treasury note yield, right, or the bond, if you
Yeah.
will, and the GDP. These are just some key points right? Which you want to pay attention to within the economy to see how things are going to perform, and maybe whatever stocks you're buying, how is it going to perform based on what is happening in the world, and of course, I guess against Bitcoin itself, right? Because ultimately, for us, we're aiming to find that ultimate investment strategy, where we're able to gain back that financial power as as an individual, gaining back the financial power as an individual,
freedom,
right, and detaching so much, I guess, financial influence on the government itself, right? So removing money from government, simply put. So CPI, right? It's one of the things we'll be talking about, and CPI is your Consumer Price Index. Double O. Tell us a bit about this basket situation here.
Yo, man, if you're breathing right now and if you're watching this show, I'm sure that CPI is kicking your butt. Yo, I mean, the report just came out a few days ago that the CPI index is at 7%, which basically tells you that the cost at which you are buying goods and services has gone up. In another word, inflation. But the reality, we are questioning this index at the moment, because when you look left and right, your gas price has gone up. Yo, I want to buy some bananas. Price of banana has gone up. I like bananas, you know.
It does not matter.
It does not matter what you're doing, and plus you're paying more taxes. You know, you're paying more taxes on your mortgage. Your house costs a lot more to buy. Your car costs a lot more to buy. Your food costs a lot more to buy. You want to move around, it costs you a lot more to do that. So 7% is not making sense.
Exactly, and we're going to be taking a deeper dive into all of that stuff, right? We also have PPI. So your CPI is a measure of average price change over time, which you pay for things based on a basket of goods, common things that we all agree that we all need. Then we have PPI, which is your Producer Price Index. I guess this is more on the side of the producers, right? People would bring those products to market, right? How much is costing them to operate, right? How much is costing them to buy the resources they need? And then you have your 10-year Treasury note, which is essentially, if you look, a debt obligation, right, by the government, right? You buy a 10-year Treasury note, here's the interest rate, and you're going to get this paid out to you every 6 months or so, right, at a fixed rate. And then you get paid the face value of it at the point of maturity. And we're going to dive into a little bit more into why we have that in here. And then of course you have your GDP, which is your gross domestic product. This would be, what would you say, a total of all the production within the economy, right?
Within USA.
Right, within the USA, right? And every country has its own as well. So with no further ado, let's jump right into this thing. We had some reports that recently came out.
It came out for sure. It did come out.
Yeah, and so one of those reports, and the cool thing about this is, now we're taking all of our information directly from the sources, right? We're not going based on what someone wrote somewhere or something like that. And I think the benefits that we're finding in that is that we're able to see the true numbers, right? We're just seeing what it is, and then now you start doing the math and you start putting things together, and you're like, well, I don't see how you guys got here. Right, it is just what it is, whatever formula it is. So overall, we can see that CPI is up 7%, right? That's just your inflation. But the reality is, we think it's going to be higher, because if we break it down into some of the other items within that basket, you see that things like energy commodities up 29%, 48% for gas and oil, 41% for energy services. I mean, all of those it seems pretty outrageous.
I need to go figure out the mathematical equations that gave them 7%, because the 7% looks made up.
If it's based on an average, right, that is clearly, obviously incorrect. If they have a certain mathematical formula which they use to come up with things like this, I would be interested to know what are the factors of that formula that are making you come up with this number, right?
Yeah.
And if we're going based on reality, just looking at things around you, I would say it's more than 7%. Everything around me has increased more than 7%.
Yes, sir.
So how are we at 7%?
That's the question. But
right?
let's go on. Let's go on.
Hey, let's keep it
Just an
moving.
overview.
So,
Yeah.
absolutely. Now, of course, we got these things. Obviously, we get this from the Bureau of Labor and Statistics, of Labor Statistics, rather. And one of the interesting things that we came across there is we have this the PPI. Now we're talking about the PPI, your Producer Price Index, which on geez, I can't speak, on an unadjusted basis, right? The final demand prices moved up 9.7% in 2021, right? And so you can see your PPI there, the cost for production, right? And you see this continuously rising throughout the year, right? Since 2020, really. And we're now at this point where we are at 9.7%, it was.
Yeah. Yeah.
And so it makes me wonder, how can it, how does that work if the producers are paying more?
Have
If
you
the
ever
producers are
seen
paying
any?
more,
Have you ever seen any company eat the cost? They always transfer the cost to the consumer.
oh, of
Always,
course,
each and
absolutely,
every
they're going
time.
to transfer the cost to the consumer, right?
So
Which,
I was PPI 9%, nine point seven
right,
percent, and CPI is 7%.
this is true. Well, that will only tell me that, because when you read that, right, just one and one is two. It would tell me that, well, either the manufacturers are totally getting killed by cost, right, and then somehow out of the kindness of their heart, which is definitely not something that we've come to associate with the crony capitalism that
Yeah.
goes on these days. How do they find it within has to be like, let's not save the consumers, let's not hit them with the price. Let's say for some reason they decided to do that. This is still unsustainable, right? Because it means that they're technically moving at a loss, which means at some point this is going to blow up,
Yep.
right? So that is one of the things. Those are one of the metrics that we see right now that are not looking very good. Moving on to the U.S. 10-year Treasury, currently yielding 1.719%, right? If we look at it, the highest point it's been was what? Maybe 1982, 1981, somewhere back there, right? And we can see that ever since, this has been constantly dropping, right? Now, there's a lot of people saying things like, hey, when the U.S. starts increasing interest rates, this may
Go up.
affect Bitcoin
Yeah.
itself, right? Meaning
Yeah.
that people will be moving over to, I guess,
By
buying
US
this,
treasuries and mutual
right,
funds.
buying this, right, buying bonds. Which then again, and I'll turn it over to you here because I know you have some really some really exciting information on this one. And for me, it was because I try to keep it very simple, man. And for me, I was just looking at it like, hey, okay, what sense does it make to sell your Bitcoin to go buy U.S. Treasury bonds that are yielding 1.79% while inflation is still 7%? You're losing money. Why would anyone do that, right? And so
Well, there are different kind of investors out there. I would say there's the old smart money. They call themselves smart money, and there's
right,
smart money, new money, and they see money differently. And the current argument in the markets right now is that, oh, once the interest rates are increased, just like you just mentioned,
yeah,
it's going to deeply impact Bitcoin because people are going to transition to a less volatile investment.
right,
But that less volatile investment, how much is it getting you? That's the question that we have. So now we're going to go back and look at some historical data, right? So now let's figure out each and every single time the Feds, or let's just call them what they are, the central banks, have increased the interest rates, right? What has
right,
happened, right? So let's just look at this past data real quick. Just look at what happened, Lehman's failed bank, AIG bailout. What was the interest rate during those times? Starting from
right,
2008, because this kind of correlates with with cryptocurrencies and Bitcoin, right? And we'll say that inflation at the time was 3.8. Remember, inflation at the time was 3.8,
right,
right? This was even way lower than what it is now, right? And if you keep scrolling down, Let's look at 2015. December 2015, the Fed starts to raise interest rates.
Right.
They also raise interest rate multiple times throughout the year. Question now is how has that historically impacted
Bitcoin.
Bitcoin?
Yep.
Now, let's go back and look at that. Also, before we jump into that real quickly, let's look at the value of Bitcoin over time. This is from 2015, by the way, and the value of the strength of the US dollar. The strength of the US dollar has been decreasing over time. We all know that. We hear it every day, and it's a big
Right.
concern for a lot of economics, right? Their arguments, which Brisson and I are kind of replaying, is that if the interest rates go up, right, people are going to go away from speculative, which they call Bitcoin speculative. By the way, this
Right.
is coming from an outlet called Total Bitcoin, and they're going to move into stuff like US bonds. And we just not seeing the argument because when we look at the charts, right,
Right.
this is the charts of the interest rate increases over time provided by CNBC. From 2008, let's look at 2008, right? Because that was the origins of Bitcoin, right? The
Right.
rate has gone up and they've come back down. Now let's look at Bitcoin. 2008, which is not shown here, to now, each and every single time. Let's go back one more time.
Yeah.
This is the rates going down from 2008. It went up in 2013 towards 2018,
Right.
came back down. Let's look at Bitcoin. 2013 to 2018, Bitcoin went up.
Yeah.
So does increasing the rate literally really affect Bitcoin? Is that a fact, or is just people just saying it?
I don't see the correlation, but I think, in the spirit of printing FUD,
Yeah.
you have to attach things to other things, because the market as well is also psychological, right? And as long as people believe you on certain things, it's like Jim Cramer, right? This guy has a massive track record of just wrecking things all across the board, right? Yet people still listen to him, right? And so you have to ask yourself, why would people still listen to him? I think it's just a lack of education in the subject matter. It is what it is.
But a lot of people, I'm a doctor. Let's say, for example, I'm a doctor. I don't have time to track economic data, so I
Yeah.
just go and watch CNBC or watch some of these outlets out there and just listen to whatever made there. And over time, people tend to want to trust them. People trust Fox News. People trust CNN for whatever reason, because maybe that's what show their father watched growing up, so they just get aligned with that. But the question is, do those outlets have an agenda? Because when you go back and do your own research, it's counter what they're saying. Let's look at another chart real quick. This is the blue is Bitcoin, the black is S&P, and the red is gold. We're saying, of course, all right, if let's say the interest rates go up, where is still the best? That's because you are trying to invest your money, you're trying to increase the value of your money. Where are the best places to put your money?
Yeah.
This is still way better than putting it in government bonds. I have to say though, gold is still pretty low. S&P is doing better than gold, and Bitcoin is still whooping butt left and right.
Well, here's it. At least gold is flat, right? And gold has been flat for forever. Now, one interesting thing is that gold has always been touted as the hedge against inflation. And we got to a critical time, right? Have you probably seen that meme where they're like, you only had one job, right? How did you mess it up? Right? And we got to a critical time when gold was supposed to do what it's, I guess, apparently it was believed to do,
Yeah.
right? What you're supposed to do. At a point where there was massive inflation, that is the point where gold is supposed to start picking up. We have not seen that. Gold has still been flat, right?
Yep.
Bitcoin, on the other hand, I mean, when you average out an asset and it's returning about an average of like 197 to 200% returns year over year for the past 10 years, right? How does someone still sit there and say this is going to zero? Right? I know, like, people try to think of like possibilities, like, well, this could go wrong and that could go wrong. It's been 12 years, man. No one has taken down Bitcoin. When is it going to happen?
I think
and it's
I
like,
think I think the answer to that question is the technology. Once you get past the fraud and you take
right,
the time to understand the technology, and then you take the time to understand the history of the banks and the history of money,
yeah,
then
yeah,
Bitcoin start making sense.
absolutely.
So the ask
So
is, if you're watching this right now, just take that little moment. We actually have some videos on that. You can check out those videos. But
absolutely,
there is an history behind all of this and why Bitcoin makes sense.
it makes a lot of sense to me. There's many many reasons why it makes sense. So one moment. So then, what I would say then, just to kind of get a whole, like, a broad picture of what is going on. We're now in this situation where, yes, the Feds could increase interest rates, right?
Hmm.
Maybe kind of do like a tapering type of situation,
Hmm.
cut down spending.
Hmm.
And we know that if that happens, then the stock market is going to crash completely, right?
Yeah,
And that's one of the reasons why we're not buying
it's not
stocks right
buying
now,
at the moment. Yeah,
because yeah, if that is going to happen, fine, let it happen. It's gonna, I mean, everyone's portfolio is going to get wrecked, and we
yeah,
can start buying at the bottom, at the
yeah,
very least.
yeah.
The valuation of a lot of companies right now is definitely off,
Excessive.
because when
Yeah,
they printed a lot of the money, people just decided to take money and just throw it
straight
all
into the stock
into the
market.
stock market, right? So
Yeah,
everything is inflated.
thanks to COVID as well.
Exactly. So that could all come crashing down. What is the other option they have? They can print more money,
Hmm.
which they're technically still doing. There's a lot of what would you say, stimulus,
Yeah,
right?
yeah. So
Still going into the economy.
for them to stimulate the economy, we either have to have another big case of COVID, or maybe we'll go to war and then we need the money for that, something like that.
Yeah, I mean,
Uh,
something will have to happen, right?
yeah,
But to keep up, just to prop up the economy the way it is right now, right?
hmm,
They have to keep essentially putting funding things that are probably just needing to fall, which they could let it fall, right,
yeah,
and let everything crash. But if they do that, then we have inflation coming up, right? If they go the
yeah,
route of printing more money,
yeah.
and when inflation starts increasing, right,
Increase
we've
the
seen
value
the
of the
we've
dollar.
seen the proof, right? The dollar is also debased, right, and
Hmm.
we've seen the proof with other countries whose currencies are at risk of failing or pretty
Hmm.
much have failed. What are the people in that country doing? They're moving their money into Bitcoin,
Yep.
right? Some are moving into dollars, but dollars are just dropping the slowest right now, and a
Yeah.
lot of those people are moving it into Bitcoin.
Mm.
So at this point, given the data that we've looked at right now, right,
Mhm.
we see that things are not matching. It's not matching. So where do we go from here?
Well, I will say that we are not financial advisors,
Or not? This is
but
just our strategy.
our strategy is Bitcoin and cryptocurrencies.
Mm.
Yeah, Bitcoin being the king coin.
Hey, you know,
uh, but hey, this is the stack strategy. We're just saying, there's got to be a solution to this problem, and if you take the time
yeah,
to understand the history of the banks and the history of your money, you'll start to understand why we need a solution and why Bitcoin might just be the solution. Again, not financial advice, but this is based on what we've showed you today. Where would you put your penny?
yeah. Now I'll take it a step further.
Yeah.
I believe that Bitcoin is also the solution for the government. You see what I'm
Yes.
saying? Like, I don't, because look, man, this situation we're in, I refuse to believe that Jerome Powell has experience with this. Where did he get the experience from? Right? I refuse to believe that the feds have experience with everything that is happening right now. Yeah, the economists can say what they want, but if you're looking at the Austrian School of Economics, it's really simple. It's 1-to-1, man. You either have it or you don't, right? The idea of creating something that is not there to keep, I mean, it's a mess right now. What these people have done, it's
Hey,
confusing. It's confusing at the
hey,
very least. It does not work.
I have put up all the previous feds that we have up there. All the
Yeah,
way from Arthur Burns all the way down to Jerome Powell. None of
right.
them have fixed the problem. They just made it worse.
Right, and it seems like they keep rolling it down and down and down the road.
Yep,
Right?
I've seen that
There's-
road.
Look, man, I'm not trying to. I'm not trying to bash these people or anything like that. You know,
Nah.
I get it, man. We're all
It's
human.
a systemic
We try to-
problem.
right, we try to figure out things. Humans are pretty smart, and we've done things up to this point.
Yeah.
And I think there's a point where we just have to go, you know what? We did the most we could do. It has gotten us so far. Maybe it's time to innovate. Maybe it's time to move to the next level.
We've done that several
And-
times, right? We
Exact-
switched up to gold standard. We got on
Exactly.
the gold standard. That's so when
There
is
we
the
go.
next change? Yeah.
You know what I'm saying? Because, dude, I cannot even begin to imagine what it would be like. Imagine if you had Jerome Powell's job, and you know that the whole country hates you. Whether it's because you did it directly, or it's because that's just the way things are right now, and your advisors are saying this is the only way we can keep putting band-aids on this economy, right? It's like it's tough. And I think that the best thing for the government to do is to study Bitcoin, understand Bitcoin, move some funds into Bitcoin, and then we can slowly start building a new economic system from there.
Hey,
And
we,
we'll all
we
win.
tried that with gold, and it worked for a little bit.
Yeah.
But then someone figured out they were smart, and it was easier for us to print money than to rely on gold. And see where that got us.
It's not working right now.
What made gold work for so long was that it was a limited amount. But we started to
Yeah.
find out that gold was not really fully limited. And it
Isn't
took
it?
so much to get to gold.
Gold supply is slowly increasing every day, but
Mhm.
it's still a very, it's one of it's still the most rare metals out there.
Yeah.
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 So I mean, look, man, I'll be I wish I could speak to Peter Schiff. I would want to know what is his thinking behind this, because as a fund manager,
Mhm.
I think if he's so strong on gold, I'm pretty sure he's performing nicely on other things as well. But if you're so headstrong to keep holding on to gold, meanwhile there's an asset out there that is just annihilating everything that is in your portfolio, because I'm pretty sure I'm pretty sure he's a good hedge fund manager and everything like that, but I don't think that he's outperformed Bitcoin.
Yeah, and I think a smart investor would say, okay, let me diversify a little bit. Let me put 1%. Let me put 2%.
Yeah.
Balance my
And
portfolio a little bit.
there are fund managers who are doing that. They're bringing up
Mhm.
Bitcoin to their clients, and they're like, "Hey, we'll start with a small amount, and we go from there."
Yeah.
But to be this one person who is just going around saying Bitcoin is going to zero and is going everywhere debating people about it, I mean, he was right before about the 2008 crash,
Mhm.
but I don't think that he's right on Bitcoin. That's for sure. So
Yeah.
we'll see what happens with that one. Any final thoughts? I mean, I think for me, man, I think Bitcoin, like you already know, man, I redirected my funds into buying Bitcoin aggressively. Still doing that, and I don't know when I'm going to stop, but I'm just going to keep buying Bitcoin.
Yeah. Again, I'm buying Bitcoin, but I'm thinking more of this sounds like the .com, because I was really like, I was in school when the old .com boom was just getting started.
Right.
And I feel like there is Bitcoin, and then there is technology, blockchain technology, and cryptocurrencies. So of course, Bitcoin's gonna do its thing, and I'm also looking into these new technologies and how that's gonna change the world.
Absolutely. Well, ladies and gentlemen, that's all we have for you on this one. Actually, watch out for our next video, because we're going to be talking a little bit about what Double O just said there. Bitcoin is Bitcoin the new internet, right? We're going to look at our rates. We're going to see where we stand currently with Bitcoin. And is there anything else we're going to be adding to that one?
Hey, just watch the show, you'll find out.
Exactly. Hey, ladies and gentlemen, thank you for watching this video. Thank you for subscribing to the channel. Please like, share, and subscribe, right, if you're not subscribed yet. And let us know in the comments, what do you think is the best route out of the current economic situation we're in? Are you worried that your money is going to lose all of its value, right? I don't know. What are your concerns with this economy, with the way it is? Because I'm worried about it, But that's all we have. Until next time, Double O out.
Well, Brazen out.
Oh, look at that. Oh, see, I was going to see if you cut that one. Oh, dude, that was awesome. Bro. That was dope. All right. Peace.
Yeah.